Hi everyone, it's Leah. Today we're going to talk about cash flow management. Cash flow is equal to income minus expenses over a set period of time. Why do you think managing personal cash flow is essential for small business owners? Well, I'm certain that the first thing that came to mind was you don't run out of money when it's important that you have some. And if you're putting too much money into your inventory or into registration fees and not having money come in, then it can certainly put not just your business at risk, but your credit at risk, where you're living at risk, every kind of thing that you can think can happen. It's often you make enough money, but you just don't have your cash flow set up in a way where you can manage that money effectively. So we're going to talk about that and do some work to understand it better. It's important for your business as well, because think about it. If you manage your cash flow well, you can focus on all the things that you need to do to grow your business and make it successful. For example, you can build a cash reserve, which absolutely reduces your risk. You can focus on the cash flow and not just profit. Your cash flow really, particularly when you're starting up, is one of those deal breakers that if you don't have it, you can't pay for the things you need to keep your business up and running. One of the things you should do is develop cash flow worksheets, and we'll be doing that today. We'll be doing it as personal cash flow worksheets so that you can see the different dynamics going on. Another thing you can do for your business is to make sure if you're in a business that causes you to do invoices, that you invoice. And if it's a business where you're building customer work, you don't just invoice, you take deposits in order to cover the cost of the materials when you're working. Another tip, when you get big enough where you actually have your own set of suppliers that you buy from, there's something called net 30. So you get a bill from a supplier, but you don't owe the bill. You don't owe the payment for 30 days. They also have 60 days and 90 days, but you get a discount usually associated with that if you pay your supplier in less than 30 days. You've got to be certain to regularly monitor your cash flow. Anything that if you're running close to zero, any emergency that comes up could really put you in a bind. So you have to have a process in place to continue to monitor it. And you need to have cash flow forecasts and targets so that you can start to build that cash reserve where we started going around the circle to be certain that you'll never get yourself in trouble. So here's an example of an empty cash flow worksheet. For each month of the year, they don't all start on the same day, but for example, in 2023, January just happened to start on Sunday. So when you build your worksheets that you're going to use over and over again, make them refillable and do one for each day of the week. Then depending upon where one month ends and the next one begins, you'll be able to pick it up and do it. Because not everybody, particularly if you're in business for yourself, you don't know when that shift, see column 3, shift, it really isn't shift. What it really is a sale when something came in. But remember, this is based upon the Bartender's Guide to Financial Freedom, because bartenders, just like business owners, have these issues. So let's go through this example of a cash flow worksheet. The first part is the date and the day. We put the day in there because some of you are probably working and you may get paid like every 2 weeks on a Thursday. So it's important to know when Thursday is. You may have a side hustle where you make your deliveries on Friday. So you want to be certain that you can plan your cash flow on what you predict will be coming in on that day. Additionally, you might have a side hustle that you get paid a different day, or where it's variable and you don't know how much it'll be. So that you fill in after the fact, but you have a look at what it does to your cash flow, and you know when you need to pick up steam and when you can afford to know that you're going to make it to the end of the month and cover each of your bills. So right there under under the number 3, you're going to put the shift, or where the money came from, under shift, and you're going to put how much you plan to earn or how much you've already earned if you're partway through the month. Then that amount will get added to the balance. You see the balance over there next to the number 2. The balance you start with, what was your balance from the previous month? Just the first month you do it, it will be 0. I hope it's not 0 any other months. But you start with the balance that you had and you add to it your earnings. Then of course there's the expense categories, which that column's right under the number 4. Those are the different categories of expenses. And if you have recurring expenses like rent or insurance or phone, you can put those in there. Even if you have expenses that are discretionary like groceries or gas or anything like that, you can also plan for those so that you know when you can afford to go get groceries because of your cash flow. Make sense? Okay. Then the other sheet that we looked at a little bit in session 1 was the monthly expenses. So this isn't too tough to figure out. Under the category, first I've listed all of the recurring expenses like rent or renter's insurance, or mortgage, interest, and a mortgage insurance, electricity, water, phone, car note, car insurance, health insurance, internet, and then 2 different charge cards, there's space for those, and other. Then you get a subtotal of what your monthly recurring expenses are. Right under that is a space to enter all your discretionary expenses, so your food, your gas, your miscellaneous, and your savings, because when you first start out, you probably aren't going to be paying that like you would a recurring expense, although you want to get to that point so that you can really start to save. You add up your total expenses, and then on the 2, where the 2 is out in the margin, you can see that I've left space for 2 different earnings. You can always, on your sheet, make it 1 more, make it 2 more. Make it as many as you need to have the type of earnings you're going to have. And it's the sum of something you're doing. So it might be the sum of your paychecks. It might be the different times that you pick up money for a side hustle, what you're estimating your monthly earnings are going to be. And then you're going to subtract, or you're going to look at, are your expenses higher than your earnings? If they are, then you have a negative earnings. If they're positive, if your expenses are less than your earnings, you have a positive number there. That number is pretty important to know because you want to be sure you can't go on being negative forever and think you're ever going to catch up. You have to get to the point where at least your expenses and your earnings are at least the same. If not, your expenses need to be less than your earnings. But this gives you an indicator of where you are now. Okay, with that, we'll be going over and looking at each of the different avatars and how they're going about their setting up their cash flow. Thanks so much. See you soon.